Good morning, everybody, and this is your Dow Jones day trade setups for today, the 2nd of February. So, noise is out the way. Feds have come out and told everybody just what we're expecting to hear. In actual fact, nothing different. And markets rallied. S&P a little bit more than what the Dow did, but the S&P's got some earnings as well driving it. So, for me, the Dow is kind of top of range of sorts. If we just zoom out to the weekly, you see this triangle that I spoke about yesterday is still pretty much intact. There's our weekly triangle there. So we're obviously going to need to see a weekly close above that before we start paying any attention to it. And at the moment we have a weekly range bar. So anything's possible. Lots of structure to the left here. So lots of potential resistance. So that is to be expected what we're seeing at the moment. When we start looking at what opportunities for us to trade, firstly on the 8-hour trend is up, although messy. Lots of tails to the upside, tails to the downside, very, very messy, lots of volatility. And if you start looking at the 3-hour, have a look what this week has been. Big down, big up, big down, big up. But still in an upward trend. So I am of the opinion that you just need to sit and leave us alone until we start getting some direction. S&P and the DAX have some pretty good structure, fairly decent trends, so it's easy to get in, keep your stops tight. Once it gets going, move your stop up, and there are defined targets that you can take. This overhead resistance here, there's 2 areas here. It's just not worth it. For every time you're below the moving averages, above, below. For me, range trading is just not conducive to life, because you tend to have to sit here and watch it permanently rather than putting your trades in and getting on with life and taking your profit, or if you got it wrong, your stop loss. But at least it gives you a chance of actually building a trading plan that can work without sitting in front of the charts and staring at the 5-minute charts every single day of your life. Anyway, been there, done that, got that t-shirt. It's not what I want to do. So for me at the moment, this rejection here is to be expected. We've got overhead resistance. I don't see solid setup to the downside at the moment. You can see there's a gap, and there's also a gap all the way down the bottom here. And I think there's still another gap open here as well. So good possibility that this just drops below the moving averages again and then continues to the downside and just continues in this range. So you want to trade ranges, go for it. Keep your levels in and buy off the bottom and sell off the top until it breaks. But not for me. I'm a trend trader. Much prefer setups that I can trust. Anyway, so this is a sit on hands for me, not really keen on getting involved here at all. We will leave it, and we will rather focus our energy on the likes of the DAX, the S&P. There's also some interesting setups in the Forex, Euro USD. In actual fact, US dollar Japanese yen has got a bit of a stronger setup there. So yeah, that's my plan of action for today. We will leave this, probably going to leave this for the week. We'll wait for next week to see what happens. But when this break does happen, it is going to set up some beautiful, beautiful swing trades for us. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.